E-mini S&Ps move lower to start the week, today closing out at 56.90. That's down only about 0.5%, but it does end the 9-streak rally that we had seen over the last 9 consecutive sessions. Ultimately, the market now waiting for clarity on how the Fed chair will approach potential rate cuts moving forward later on in the year. At May FOMC on Wednesday, no, we're not expecting a rate cut this week. However, the market is pricing in rate cuts for July, September, and October. So it will be interesting to hear how the Fed chair has to say. Obviously, the Fed chair has been very much waiting for clarity. They'd say they'd be patient about inflation and waiting to see what happens with some of the growth numbers. So clearly, after getting the jobs number on Friday and after getting the GDP number last week, it'll be interesting to hear from the Fed chair himself how he views the economy and how he views the potential for rate cuts moving down the road. But again, seeing E-minis come off slightly to end the 9-streak rally down at 56.90 today. Now, what does this mean for volatility? Well, looking at volatility has made a big move lower during that nine-day session where we were rallying consecutively, taking us down to 1-month lows. That's kind of where we sat today. We didn't see a whole lot in volatility today. Even though we saw E-minis moving slightly lower, volatility was basically unchanged on the session, holding at 1-month lows. Lastly, let's talk about what we have tomorrow. Tomorrow's Tuesday. It is a quieter day for data. We do get the trade balance numbers and we'll continue to get earnings, but really what the market's focus is going to be is Wednesday's FOMC, and more specifically Wednesday's FOMC press conference, as they wait to hear what the Fed chair has to say about the potential for rate cuts later on in 2025.